Hey, welcome everyone to another episode of our Facebook Live. Today is our July 4th weekend, and we are excited because there are two big things. We're having a great weekend. Everyone is barbecuing, as well as the bill that's going to get signed, which we are so excited about. Again, this may not fit everybody's budget or wallet. However, for most of us real estate investors, as well as business owners, this means a lot. So today I am joined by my good friend and partner, Tom Bibi Varghese. I am Dr. Noah Liu. And here you go, Tom. I'm going to pass the mic off to you and let's get started, man.
Hello, everybody. Happy July 4th weekend. I know everybody's having a great time. And in between that time, we just wanted to come in with this Facebook Live and give some great updates about what's going on and how it's going to benefit each and every one of you. My name is Tom Bibi Varghese, good friend and partner of Dr. Noah Liu. We have been running this Facebook group for I think 2 years now, and it's
Hmm.
ballooned to 10,000 plus people, and obviously people are benefiting out of this. So we both started investing in real estate probably about 3 years ago. Built up a portfolio of multifamily apartments. Then we switched to storage units, industrial, and we see firsthand the benefits of passive investing and how you can generate cash flow and get a lot of tax breaks when you invest in real estate. Especially today's topic is going to be about how you can take advantage of 100% bonus depreciation that's coming back starting 2025. So let's talk about that, Dr. Nolu.
All right, my man. So let's see here. What is bonus depreciation? Let's start with that first.
Yeah, exactly. I'm sure a lot of people have questions about bonus depreciation, especially if you're not in business. You probably have never heard of this term bonus depreciation, or simply it doesn't apply to you, right? So, what bonus depreciation basically means is how you're able to depreciate investments into real estate, basically property or your business, and basically you can take it out of your tax. So let's say you invested $100,000 into equipment or
Hmm.
property, and the property value with a certain set of calculations comes out to be $80,000. Basically, you are able to deduct $80,000 from your tax bill for the 100,000 that you invested. So basically, it's going to save you a lot of money in taxes. It
Right.
is a depreciation. It's a deferred tax. That means when you sell it, if the property value went up, there's a recapture involved. But there are other ways to
Offset.
offset that as well, right? Did I explain that right? I mean,
No,
what is that? What
100%.
is that you would add?
100%. So, like anything we buy in equipment wise is depreciated over time. And then what happens is, like Tom just said, we can actually take the entire amount and just depreciate it right now, the year one, to offset all that year's income, right? So that's a huge, man. That's a huge. What do you think it affects with real estate? How does it affect real estate?
It's huge. So let's say you're a business owner, and you're generating, let's say, for example, $500,000 in profits. That means you're going to pay taxes on $500,000 in profits. What you want to do is go and buy a property, let's say worth $1 million. Okay, these are
Hmm.
just arbitrary numbers. And the property, they did the math, it's called as cost segregation study and all that. And they came up with a number saying of the $1 million of the property that you purchase, 80% of that is depreciable. That means $800,000 can be depreciated. So now you're going to pay taxes on $500,000. Now, with cost segregation, you're getting a benefit of $800,000 deduction. Now, your tax bill is going to be negative. You're going to be not owed taxes. You're going
Right.
to get a credit of $300,000 that you can deduct next year from the taxes. So that's how bonus depreciation works, and how it
Correct.
really will help you in your taxes.
So in real estate, what happens, what Tom is saying also, it's that negative carries over to a form called a K1. And with that K1, we can actually offset taxes that is owed on that property. So got to keep in mind, that is something different. That is like totally passive. So we cannot combine the active and the passive together,
That's right.
unfortunately.
That's something I forgot to say that
Right?
actually. Yeah.
Right. So passive is passive, active is active. So these are two different things, apples and oranges, right? So the bonus depreciation on the business side is on the equipment, on any of that stuff that we get. So let's say, for example, it could be a dental chair, it could be equipment of some sort that we use, and we can actually take that entire thing and write it off on day one.
So,
Or
so let me ask you about the dental chair and stuff. So let's say somebody wanted to revamp the office and buy like five dental chairs, and they were like thinking in 2024, man, that's a lot of expense. And now, how is that going to affect and help somebody in 2025?
so let's go back with this question. Let's hold this question for a little bit, right? Let's go back and let's talk about what happened from 2023.
Yeah,
Okay.
yeah.
So
So when
and
Trump, yeah, that's something we got to touch on. When did bonus depreciation first come in? Was 2018 when Trump passed that law, right?
Right. So that came in, everybody got on a high, right? So right after COVID and everything, it kind of carried over. And that's where real estate started booming. Okay, started booming. Everybody got on the train and everybody got that bonus depreciation. And they had a loss carryover year after year, which they still kind of locked it in their negative K1. But starting 2023, this is when the bonus depreciation started phasing out. And it was
So,
supposed to
so, so
phase
let's
out.
let's let's explain that too now.
Yeah, let's do it.
Yeah, so we said bonus depreciation is 100%. There's different percentages. Okay, that's a little bit confusing here. For example, I gave you that example of somebody making 500,000 and buying a property worth $1 million, and then the bill, the depreciable amount was $800,000, right? With 100% bonus depreciation, you can take up the entire 800,000.
Mm-hmm.
But what happened is, after the bill got passed last time in 2018, they decided it's only going to apply for 4 years. The 100% will apply for 4 years. And after 4 years, starting in 2022, 2023,
23. Yeah.
it'll get phased out from 100% to 80%. And the next year, it'll go to 60%, which was 2024. And in 2025, it'll become 40%, and it'll get phased out like that. And now Trump is
Correct.
back in power. So he introduced that 100% bonus depreciation back on the table. And is that permanent? Is that going to be permanent? Is that the plan?
Should honestly, there's so many resources online. I don't know. I cannot comment on that, but this is what I know so far. This is what happened. But here's the deal. Let's take advantage of it this year, right?
Yeah.
So what Tom is talking about is on the real estate aspect, the RE aspect, where we do a cost segregation, where we get that bonus depreciation, and that is locked in. The other arm is the business aspect, where we actually buy equipment, and that was a Section 179 that we were talking about, right? And and that was phasing out as well. And the last time when I was speaking to my accountant, I was like, hey, what if like they have those cars that you can buy under the business, and you can write it off over 6,000 pounds. A buddy of mine just bought a Range Rover like 2 years ago, and he wrote the entire thing off,
Yeah.
right? And that was when it was 100%. But my accountant was telling me, well, if you buy it this year, it's going to be 60% and won't get the whole thing. And I'm like, oh, okay. So it's 60% of the vehicle. And again, there was no limit on the price of the vehicle as long as it was over 6,000 pounds. And that's exactly what she told me. So what this does is this bill will actually be retroactive from Jan 1st, right?
Hmm.
So we buy something this year to offset our taxes this year. So if we feel like we made quite a bit this year and we want to offset something, this is the best opportunity to start looking from now until December 31st, 2025. And, with that being said, from 60%, which we were at, which next year was supposed to be at 40, now it's going to be back up to 100%. So we are
Yeah.
talking about the real estate arm and we are talking about the business aspect arm.
Yeah. Yeah. So it does. So it could be business equipment, could be a vehicle, it could be
Hmm.
anything, any investment in the business, practically, right? Is that
Right,
right?
right.
Yeah.
And I'm not sure exactly how true this is. And I heard this as a rumor last time when I spoke to my accountant was if you have a real estate and you have your dental practice on the same property, right? and you're treating it as separates, now you can actually combine them as one and write the whole thing off.
So
So
explain
I
that.
don't I
So
I don't know if this is true or not. If someone knows more about it, please comment on it or correct me if I'm wrong. But this is what I heard. So it's like you have real estate and whatever it's worth, let's say 500K, and your business is generating income, and you're paying, and you let's say you're paying rent. You do a cost seg, you get that bonus depreciation there, you get your business's bonus depreciation, and you can act as one entity for tax
mm,
purposes, right?
yeah,
So we have a legal purpose where you have two separate entities, but for tax purposes, you can actually make them into one. Now, if anybody have more information on that, please comment. I would love to learn more about it.
mm, absolutely, absolutely. That's going to be this is going to increase a lot of investment into in businesses in real estate, especially. It's going to be booming, and the prices of investment property are going
Hmm.
to go up. Right? What do you
Oh,
think?
100%. 100%. I think this is going to spark and start the whole real estate boom up again.
Yeah,
Maybe we're not sure it's going to be like 2020 and 2021 or 22, but it's definitely going to happen.
yeah. I mean, the reason is because people will simply start investing, not even looking at the numbers, but because of the amount of depreciation that can take, right? So
Hmm.
that's what happened before. I mean, we don't advocate that. No matter what the reason is, we should always look at the numbers and invest based on the numbers, not on the bonus depreciation.
Tom,
But
let's take a little deviation. I want you to explain one thing real quick here. Bonus depreciation for real estate. What does that include? Is it? I remember we spoke about this one time in our live. Was the siding, the carpet, the windows,
oh yes, mm,
right? How
yeah.
does that work? If you just kind of recap quickly.
So first of all, let's look at why the government allows this depreciation, right? So when you buy a building, you know the value of the building is going to go up.
Hmm.
But when you go file taxes, IRS is allowing you to tell the IRS that your building's value is actually going down every year
Mm.
because of these things. Okay, the land value goes up, but the items in the building, like fans, electrical, plumbing, carpets, it could be other things that are been installed, anything to do with light fixtures, alarm systems, all these things are going down in value. And also some construction materials that were used in the value. Of course, the land value is going up, but these things are going down. So they are allowing you
Hmm.
to take a loss. That's actually a loss. So you invest $100,000, 5 years down the line, that's probably worth $20,000. So IRS is saying we understand that you're making a loss on those things, so we will allow you to deduct those. So in order to find the things that are depreciable, you need to do what is called as a cost segregation study. This sounds complicated, but these are very simple. There's so many people who do it for you, and so it's
There are
pretty.
companies out there that would do it.
Yeah, and so basically, it's items in the building that is going down in value: electrical, plumbing, fans, alarm systems, washing machines, all those things that's in the building. Right? Is that right?
That's right. That's right. So all that can be depreciated over time if it was conventional.
Yeah, yeah.
Uh,
That's something we got to touch on too. The how they allowed the depreciation of that before the bonus depreciation. How was it? You want to say that was 27 and
yeah,
a half years?
27 and a half years. And depending on what item are we talking about, it could be anywhere from like 15 years. Some of them are 7.5, some of them are 27 and a half, right? Depends. But what this is going to do is going to have everything take up and get depreciated year one.
Yep,
And then we
yep.
can carry over the loss year after year after year after year, provided we still keep the property for 10 plus years. Then we can actually get the whole depreciation uh, value out of it.
Yep,
Otherwise, then there's something called a recapture, which we are not going to touch on right now because of time constraints, but that's a different can of worms
yeah.
with the recapture. But with that being said, this is a good time, and definitely everybody should look into this this bill and get a little bit about the know-how, what it includes, what it excludes, and what it would do for our own economy, our own family economy, pretty
Hmm.
much.
Yeah.
At the end of the day, Tom, you and I, we always discuss, right? Whether you're blue, you're red, you're white, whatever it is, I don't care. What affects our wallet at the end of the day, that's what
Oh yeah.
matters to us,
Well, 100% right.
right?
Exactly. Yeah.
It's not about a political party, not it's not about any of this stuff here. We don't get into politics, but what affects our pocket at the end of the day, that's what matters to us, and that is what we actually kind of make our
Yeah.
moves and do what we have to do.
Yep, that's at the end of the day, that's exactly right. So this is going to have a massive impact in a positive way. Many business owners, in fact, all business owners, if they do the thing, if they do it correctly, like you said, you can buy a vehicle for business and write it off 100%. I mean, it
Oh,
could be a
right.
Range Rover, it could be whatever. There is no stipulation. It could be a cyber truck, it could be whatever. As long as you use it for business and the percentage that you use it for business, you can write it off 100%.
And even
That's
as entrepreneurs and business owners, we know that there are going to be tax breaks on the federal level.
yeah.
So why not take advantage of it? So, for example, if we bought like $100,000 vehicle, which is like 6,000 pounds and up, I mean, we were going to pay IRS 40,000 anyways on that 100,000 we were going to spend, right? So let's take that, provided that you need the vehicle, provided that it's going to be used for the business, but right. But you can take it, and now the vehicle costs you about 60 grand.
Hmm. Yep, that's how you play the game, guys. It's
Yep.
how the wealthy play the game, and everybody gets upset that so and so they're making a lot of money, paid zero in taxes, and every time we see a lot of hate online, but they just know how to play the game right. And with this bill, I think there is a lot of room for entrepreneurs to get a lot of tax breaks, and that's what this bill is for. And I hope you guys take advantage of that. And if you have any
100%.
questions about this, definitely comment. I know a lot of people who are watching probably know a lot about this, and tell us how you took advantage of this in the past and what you're planning to do in the future.
Oh, 100%. Even though, we make this to our new members who are actually newbies in real estate or in business, but there are many guys in this group that are way, way more advanced. Definitely would love to hear from you guys. And lastly, what I would say and urge everybody is speak to accountants, speak to CPAs. They'll probably know more. And when you have time, dive a little bit into the bill and see what it is and see what benefits you. And
Yeah, we also have to put the disclaimer that we are not tax accountants or we are not
oh,
tax experts.
100%.
We're not CPAs or tax preparers. And all the information that we're giving you is for information purposes and entertainment only.
We are just informants. All right.
Yeah.
Well, let's land the plane, Tom. I think that was a pretty good live. And anyone, you guys have any questions, definitely feel free to ask. Make sure to like. And other than that, everyone have a safe and a great fourth weekend. And we will catch you back up in our next episode of our Facebook Live.
Happy 4th, everybody. May the 4th be with you.
All right. There you go. Love it.
Bye.
All right. Bye.